we are in episode 18 of the Simple Success Podcast. This is financial life coaching from a happiness perspective. Coaching happiness. When you change you change everything. Last week we talked about robo-advisors. This week the pod is about initial public offerings, or IPOs. As always, we start at the beginning. What is it? According to Investopedia, an initial public offering, or IPO, refers to the process of offering shares of a private corporation to the public in a new stock issuance. A public company is what happens when private companies raise money from institutional investors or public markets. To be really clear, news about this mostly involves the stock market, but it does not have to be limited to that. Translated into English, we have Company A, which wants to have more money with which to do, presumably, good things. They have either exhausted the supply of private investors, or they've tired of that game, or some other reason which makes raising money from you and me, the public, more attractive. To do this, they have to give us something we value in return for something they value. In this case, we value owning a piece of them, and they value our money. They also value their public image, but that's another podcast. This is an IPO. It's the first time such an exchange, the partial ownership of Company A in return for our money, happens. Later today, or tomorrow, or any other time beyond that, and Company A is said to be, air quotes, trading in the secondary market, or is changing hands from one person who is not the first owner to another person who is also not the first owner. The cost which occurs at that time is often based on people's future expectations then, which could be higher, could be the same, or could be lower. Are IPO shares popular? Well, according to MarketWatch, just in the week this is being written, IPOs are expected from 7 companies, including FTC Solar, a relatively long-term maker of solar panels, and then there's another 2 anticipated, including The Honest Company, makers of honest tea, among other things. Even eyewear retailer Warby Parker is considering this after a few rounds of fundraising over the past 10 years, and the trading card company Topps is also considering this, now that it's led by former Disney chief Michael Eisner. Then there's Airbnb, and we're not even getting into special purpose access corporations, or SPACs as they're called. That's a different pod, but clearly all these companies anticipate their share prices to increase, and I think that's a pretty good strategy. Do they affect you? Well, IPOs can affect any type of investment, whether on the New York Stock Exchange or the NASDAQ. There are IPOs for companies making things related to crypto and blockchain, and that's not touching ICOs, or initial coin offerings either. Nothing is foolproof, however. I searched for an article on Bloomberg entitled, "Are You a Robot?" I've linked that in the show notes. What I learned is that it was not an article, but an actual CAPTCHA test. By the way, no, I'm not a hacker, and I don't know any company insiders. Anyone can invest in these, but here's how it normally works. After Company A has determined that it might want to take this path, it looks for advice from big financial firms with a reputation for knowing how to do it. At some point in that process, a price range is determined. Let's say, for example, Company A will IPO at $13 to $18 per share. The advising financial firms, usually one primary one in charge, plus 2 or sometimes many more secondary firms. These are firms who support the idea, but don't necessarily call any shots. However, brokers at those firms do have their list of favorite customers. Those people might be friends or family members, but they don't have to be. Still, the list of names is often called the friends and family list. If your broker has you on her list, then you might just get the opportunity to buy in at the IPO price. The price is determined this way. Those brokers put out different forms of feelers as to what their customers would actually pay. $13? $18? More? Less? Somewhere in between? After the primary firm, often called the underwriter, is happy with the average of all the estimates of all the brokers, whether at their firm or not, then the opening price of the common shares is set. Buyers can sell their shares quickly, of course. Once they have bought the shares, they can offer them right away on the secondary market, or as a secondary offering, which I talked about before. In fact, the way it often goes down is that the IPO buyer takes on their allocation of shares at the initial price, we'll pretend that was $16 US even, and then takes advantage of the hype that got everyone so excited about Company A in the first place. He then sells it to one of the people who weren't on any broker's list, but who also got caught up in the hype. By noon of the same day, Company A, which started out, you'll remember, at $16, has seen a bit of growth and is now going at $56 on the stock exchanges. So the IPO buyer who was on the list makes $40 per share, and not for nothing. Yeah, it's fashionable to say they made their money for nothing, but that's also a statement of hype. I'm not saying this is 110% virtuous, but they did take risk over a period of time, and they deserve something for that. You too can make significant profit by deploying funds this way, but you could also have significant downside. And here's an example. Facebook. Of course, It was not a bad idea long term, and it still isn't. I mean, the growth potential was huge given our 2020 hindsight. To be sure, most people's idea of things like long-term and future growth was over a mere few weeks after buying. But in the case of Facebook, people were sparked by the idea of huge riches by getting in before anybody else did. Air quotes, before anybody else did. This can't be true just because it's possible. If that's all it took, we wouldn't get out of bed in the morning. But we do, and we'll get back to that story in a second. Hello everyone, this is John with the Simple Success Podcast, financial life coaching from a happiness perspective. Because we know you want to show us some serious love in return for the tremendous benefits you get from us, please head over to https://anchor.fm/ Simple Success. That's one word, Simple Success / support. There, you can choose from a $9.99 per month doer level of support, a $4.99 listener level, or a basic intro level of just 99 cents per month. That's not much when you compare it to a stockbroker, right? And this is so much more sensible. To leave us a voice message, which just might see the light of day in a future podcast, go to https://anchor.fm/ Simple Success, again, one word, Simple Success / message. I won't repeat those links because weird, and anyway, show notes. In that spirit, today's episode is Initial Public Offerings or IPOs. Once upon a time, Kelly Carter prepared herself to take advantage of an IPO, an initial public offering. She was going to get some of those shares of stock for herself. Everybody, every single one of all the potential investors was going to get in on this one. Everybody knew it was going to be the next Microsoft, the next Google, or Facebook, or Twitter. Oh my God, it was going to be. She was going to be. One minute she was focused on what to do for her family to get through the pandemic. Then, all of a sudden, she was supposed to drop all of that and focus on capital, on what Robinhood was doing, and what the GameStop thing was all about. This led to her epiphany. She didn't have to be a sucker for external things. She didn't have to be moved by forces she couldn't control. She could pick and choose when to deploy some of her dry powder, another term for her uninvested cash, and put it to work to benefit her future. And that was that. No liability. It was what she focused on from that moment forward, which made it a wonderful day. And more about that wonderful day right after the break. In this Simple Success podcast, as well as in our webinars and masterclasses, we are very, very much going to want to hear your story. Well, to be real, I mean in future episodes of the podcast's webinars and masterclasses. This means you. Your participation is critical to our mutual simple success. It's important to know how you think, what you've thought, what you've tried, and what you've been unsure of trying. As we told you at the beginning, and as you also find in the show notes, we have ways you can contact us. It involves a special link where you can leave us a voice message, which just might see the light of day in a future podcast. We may have an email address for you as well in the future, and we'll let you know when that happens. Together, we're going to make it great. We're going to do what even we didn't think possible. We know a lot about you already because we know ourselves. For example, we know that you know how to listen to our podcast. We also know that you probably know how to subscribe. The reason every podcast asks you this is because when you subscribe, you automatically download all future episodes of that podcast. This means better rankings, more attention from advertisers, and more money. And that means more and better stuff for you. So your motivation is simple and easy. Subscribe today, wherever you get your favorite podcasts. Oh, and don't just try to subscribe. There is no try. There is only do. Remember, this is financial life coaching from a happiness perspective. Right after this, we'll explore some more important details you should know. But for now, use your imagination to help create your story. Let's get on with how to overcome this kind of problem. What to do and when and how to do it. Initial public offerings or IPOs. Today's call to action involves today's topic, as you might suspect. It's easy to see that step 1 is having done what you just did. Learn about the topic. Step 2 is deciding what to do about the topic. Step 3 is putting this opportunity in perspective as compared to other opportunities you might have. And if you don't know what those are, then you've identified another important thing to do first. Step 4 is to realize that being first among all the individual investors is not something to equate with being successful. Speed is not the game. Patience is the game. Step 5 is avoiding any negative reasoning involving why you are or are not included and what it might or might not mean to you over the long haul. Your ultimate takeaway is that being in on trends is not the best path to success. I'm certainly not saying that you shouldn't be early. Absolutely you should. But that doesn't mean that you need to rush into IPO investing or any other area where you don't yet understand what you're rushing into. Careful steps in everything, whether or not it's about your portfolio. We're changing the way we look at things, and remember, that's good. Also remember, this is financial life coaching from a happiness perspective. Coaching happiness. Everyone listening can head to that voice message link in the show notes to record a voice message for a future podcast. Next week, we're going to look at another concept, and that is, we make 35,000 decisions a day. As before, that got picked for me by my topics randomizer. So you know, I'm not pre-packaging this stuff, but instead making it relevant so we can all, me included, learn how to do this right. We're going to bring that into the world of investing, and it's going to be a great episode. But for now, remember, happy Hairball Awareness Day. I mean, all you need to do is practice, after which you'll get good. Gracias por escuchar. A la prochaine. For this Simple Success podcast, the Techno King is John C. Brandy, the Seagull example, Shola Salako, fact checker, Abraham Lincoln, French consultant, Virginia Mitchell, media expert, Favour, Obasi-Ike, psychologist, Sigmund Freud, rabbit hole advisor, Dr. Marg, Perrott, sound designer, Gugliemo Marconi, Spanish consultant, Cameron J.K. Brandy, videographer, Alfred Hitchcock, audio props go to Les Paul, inspiration to Napoleon Hill, Earl Nightingale, and Bob Proctor. Also, we have a website, and you can subscribe to this podcast. You can even send us a video, audio, or text message. But of course, you'll have to head to the show notes, either on your phone or on the web, to actually get links and stuff. Finally, you can find us on Podmatch, where we consider guests for this pod, as well as consider guesting on other people's pods. And really finally, the music for Simple Success comes from the song Cute by the artist known as Bensound on freesound.org.